Alrighty, good morning everybody. Just coming in after the 4th of July weekend here, so hope everybody had a good time there. And we're going to get back into it. It is Wednesday, July 6th, 2022. So we're just going to go ahead and jump up to the higher time frames and take a look at some of the levels or what the higher time frames are saying this morning. Um, We'll go up. The 3 month hasn't changed. We have that really nice potential bullish divergence forming off of the yearly lows right now, and nothing really new to mention there. And then we've now opened for a new monthly candle here for July. Last month's candle obviously looked very, very heavy, and we are sitting still pretty far down below 50% of the last month. So things not looking too great from that monthly perspective, but we also do have the same bullish divergence from the yearly low right now that is still there right for, unless the new monthly candle goes ahead and sells off and breaks through that low, we still have what looks to be a pretty good confluence of bullish signals from that low at 36.39. So monthly shows that as well. And then we come down to our weekly, and same thing on the weekly. We've got the bullish divergence from the low of the year at 36.39. But now looking into the weekly candles here, last week's candle obviously looked pretty bearish, although somewhat, if you ask me, somewhat of an ambivalent looking candle. It was red, but we closed with a wick of about 50% to the downside. It just looks, it's very hard for me to really interpret that in between all the mess that we've been in here. But we do have that bearish divergence from the high of last week that we've talked about, I think, ever since we did make the high. Again, we'll have to go down to the daily to see what day that happened there. But we came up, made that high, and we got a confluence of bearish signals. And ever since then, we made the high about 39, let's just call it 30. Yeah, it was 39.50 because that was our minor eye level that we came up and tagged. So we came right to 39.50. And from there, from all the bearish signals on all the higher time frames, we sold off all the way down to the lows of this week around 37.50. So we've got a 200-point pullback since we started watching that bearish divergence. Think that's all I really have to say up here on the weekly. Nice clear bearish divergence from the previous weekly high, and the previous weekly candle itself is somewhat messy. Coming into the daily, here you go. The high was back on June 27th, but going into June 28th is when we were watching a potential bearish divergence. However, remember what we talked about last week looking at this. Not necessarily my kind of pie in terms of a divergence setup, but I think there's an argument to be made. So we did get that agreement not only on the weekly, on the monthly, on the 3 month, down on the 4 hour as well. Or I'm sorry. Let me go back here. On the weekly, the daily, and then on the 4 hour from that high back here. Sorry. So pretty good follow through. Looking at the current situation on the daily here, yesterday we closed with what I would argue looks like a somewhat of a bullish candle there. Huge attempt to break lower, and then we came down and tested the highs of last week, and then bam, came right back up and closed at the highs of the bar. So looks somewhat bullish. However, there is an argument for a bearish divergence off of yesterday's high. And in this case, we have to see what happens today and tomorrow to see how this RVI evolves here, because right now it's basically a flat line that is very slightly trending lower. We're talking probably fractions of 1% lower here, even though price has kind of shifted a little bit higher. So it's there, but we do have to see how today and tomorrow looks. But outside of that, just look at the last 5 or 6 candles here. The overnight session from today, yesterday, and then the last 3 or 4 days after that. We're stuck in a pretty tight range here, and you can see we pulled back and then held this line coming across here is the 61.8 retracement of the whole push up. So we got the whole push up, a pullback to the 61.8, And now this is the third day we've come down, tested it, and bounced out pretty strongly, right? So we've got what looks to be somewhat of a bullish argument from these lows, the low of yesterday, but we do have what looks to be a potential bearish divergence from yesterday's high on the daily chart. And again, it's in a tight, choppy zone here. So it's probably going to be a messy interpretation until we can get some breakout either to the upside through yesterday's high to come up and push into the higher retracement levels of the sell-off right here, or turn around to go ahead and break through the lows of last week. So that's what we're seeing. Go down to our 4-hour just to see if we have any clear signals. And what we have is that really clear bearish signal from yesterday's high. We have a really clear bullish signal from yesterday's low. Again, kind of stuck within about 4 or 5 days worth of choppy price action. And now coming into the open here, the overnight session high gave us a bearish divergence. And when the market pulled back from there and then came back up to retest that high, I believe it was to the tick, missed it by 1 tick, essentially a double top here. We don't really have a double top on RVI, so maybe even there's another argument from the high of the overnight session to this other high that we tested. There is some bearish divergence going on there as well. So some bearish clues from the highs, some decent bullish clues from every time we come down to test the previous weekly low. Again, it's going to be one of those mornings where it's a messy situation and we have arguments on both sides, right? So we're holding the 61.8 of the whole push up from the yearly low back here at 36.39, but we're having trouble on that bounce getting back up through. And if you measure the leg down here, do that quickly here, down, we're coming up right into the 50% and just not being able to get through. So we're stuck right in the middle, and we're just going to have to go with whatever the market gives us this morning as far as direction. So let's get into our 60-minute, and we'll just talk about all the levels we're going to be trading with this morning and all the areas we want to be aware of, regardless of which direction things go. Remember that getting through yesterday's highs opens us up into the deeper retracements of the sell-off here, and there's no guarantee that the bulls are going to have the strength to go ahead, get through all of the potential resistances up above and break out of I guess the end of June's highs there. So just be aware, we'll talk about those levels. And then back on the bottom end of things, if price does fall out and break through the lows of last week and the low of yesterday, we're coming down into all these areas that we talked about last week. So probably don't have to spend too much time on all those different levels, but I'll go ahead and mention them here. So if the bulls end up holding things up, again, it could go either way this morning. Given the signals we see, given the price action, given where we are in terms of the last two major pushes or major legs, we're stuck right in the middle. So let's take a look. If the bulls do end up gaining strength and they can get through the highs of the overnight session and get through the highs of yesterday up here, we're looking at the 61.8 retrace of the whole sell-off from back when we called the bearish divergence on the higher time frames off 39.50. So if we go 39.50, the high of whatever it was a week or two ago, all the way down to last week's low, our 61.8 is sitting here at 38.70 quarter. Okay, so that would be the 61.8 retracement level. If we can get through the high of yesterday, that could act as some trouble. Then we get into our minor eye level 38.75, and then that major swing we've been watching for about a week up here at, get the number, 38.85 3/4. Then from there we've got, remember where the gap formed, the close of that Friday coming into the end of the week there. That's where that sits, and there happens to be some decent price action from that area, some really good support back from a week or two ago in that area as well. So I'm leaving it on there just as a potential trouble spot. If the bulls push through the major swing here, there might be some trouble there. If not, it's probably a nice clean push right back to the major eye level at 39.1650. And then this retracement level you see coming across here at 21 or 39.22, that's that 50% retracement of the whole sell-off going all the way back to the highs of the end of May there. So from the highs of the end of May all the way down to this low at 36.39. So if we get all the way up there, that's what we'll be contending with. And then from there, I'm sorry, I mixed that up. So this is the 38% retracement level. So, as far as whether that will continue to be relevant, given that we've already broken through it and gotten messy there, that will be the question. And then we're up into that pocket that we've been watching here from 40 to 50. And then if the bulls do end up breaking through the highs of the end of June, we're right up into the 50% retrace. I'm mixing these up. So this is the 50. We'll be pushing to the 61.8 retracement of the whole sell-off from the end of May highs. So getting through 50, there's a huge pocket here for about 30 points to the next major eye level at 39.84. And then that 61.8 is 39.88 half. From there, it's just all the major and minor eye levels, although I have to extend this out. Remember, we've got a little pocket of consolidation going back from basically the overnight session of June 9th going into the morning of June 10th there. That pocket, which if you go back to previous sessions right within that area, there is some interesting stuff going on. So I will extend these out. Remember, we've got about 4,006, just about 4,015, and then just about 4,030 as those areas. And then we have the minor eye level at 40.23 in between. And each one has relevance. So I'm going to extend these out to today so we can be aware of them. And we'll just do the 7th on that. I wonder if I can just copy the whole thing. Say OK. See if we can do this. Beautiful. Okay, so we've got those. And then just because this is technically our first pre-market of the week, I'm just going to go through every level up top here, so I don't have to mention it tomorrow and Friday. We've got the major swing up here at 40.74. Remember, those are the lows that we were we were waiting to break to get short a couple weeks ago there. I believe it was 40.71.50 on the old contract. New contract is up here at 40.74, these lows. And then we have the major eye level 40.81. And I'll just go ahead and keep going. 41.07 half, 41.23, 41.42, 41.66 quarter, 41.84 half, 41.92, 42.03, and then we've got 42.13, 42.38, and 42.56.50. That's going to bring us about 400 points higher from where we are right now. I don't expect there to be a 400-point rip your face off rally back up, but that is everything, covering everything above us. If the market ends up selling off, like I said, it's hard to determine who's going to win out here until we get a break of some of these levels. But if they sell off, down below us, we're dealing with 37.09 to the swing at 37.13. We've got 36.90, 36.81, and then to be honest with you, every other level below us is just major and minor eye level. So I'm not going to sit here and list them. You should have them on your chart if you got the list when we move to the new contract. So that's what we got down below the low of yesterday. And then I just want to toot my horn really quickly here and look at the high of last week. So last week, remember, we weren't here this week until this morning. But I do want to point out that the high of Friday was magically our major swing level right here at 38.34. And we talked about it being somewhere around 38.33 to 38.34. Let me just make sure. 38.33 to 38.34 quarter as being a really good pocket of resistance. And again, the high of Friday was 38.33 half. Right in the pocket of that expected resistance area. But anyway, I digress. I just wanted to mention that. And now let's look at the pullback here into yesterday's price action. We've got three major retracement levels, the low of yesterday all the way up to the high of the overnight session. And just so happens in the overnight session, they came down and bounced to the tick off the 38% retracement. 38.08 3/4, that is the 38 retracement, and that is the low of the overnight session. So that's probably already been tagged. Now we want to be aware of the 50% down here at 37.96 half and the 61.8 at 37.84. You do have 50% of yesterday sitting there at 38.01 that you should be aware of. And then just below the 61.8 here, in fact, we might want to go ahead and shade this pocket in here from this major swing at 37.81 up into the retracement at 84 or whatever it is, yeah. So I'll throw that on there, get it on all the charts. That would be a little area that would make sense for support. And then if the market breaks down below that, I'd be looking at this area here, 37.73 to 74 half. A little 1.5 point pocket right there. So we'll get that on all the charts. And then it's right back down to the low of yesterday. So those are the levels we have within yesterday's price action here. And then of course, don't forget we have our holy orange power level sitting here at 38.28 half, 38.28 3/4, and the close of yesterday at 38.33. As you can see, it's been a total mess within this pocket between 38.22 and the retracement level at 38.45 here. So might be smart to be pretty selective until we can get some direction and a breakout, either above the high of yesterday or down below the low of the overnight session here. And until that happens, this pocket here could be pretty messy. So I think that covers everything coming into the open here. I'll go down to my 10-minute just to see if there's any other levels or interesting things to note here, but don't really think there is anything. So let's take a look at the 10-minute here. Yeah, really nothing else to mention. So that covers it coming into Wednesday here. Beware that we do have news 15 minutes after the open. We have, let me just look at what is here. So we have the PMI composite final release 15 minutes after the open, and then 30 minutes after the open, we have the JOLTS report, we have the ISM Services Index. These are things that could lead to some messiness in the dome or a potential move. So be aware, and I'm going to go ahead and mark this on here. We've got 6:45 Pacific as our 6:45 locked. 1 minute. And I'm going to copy that up to my 3-minute chart. And then we have another alert that we want to be aware of at 7 a.m. sharp. Okay, so be aware of those two potential market moving news events. And outside of that, we're going to go ahead and get ready for the open. So have a great day to those watching on YouTube.